Yeah, okay, let's continue, guys. So this is the final part. Now, the thing is that these are your targets. Those liquidity points are your targets, okay? Those liquidity points are your target. Then, I don't even care the harmonic pattern it is. My final exit on every harmonic pattern is always 0.796. It depends on where the liquidity points are lying. First of all, this point is a break of structure and then it's a liquidity point. And the final part on this trade, it depends on the particular trade anyway. Every trade is going to be different. Now, you can see that this was a fair value gap and this is an order block. So your final target, of course, should actually be, and that was what happened. Price came there and then reacted from there. And then, first of all, another thing is that if you look at it on the harmonic pattern, you find out that from this point to this point, the target of, excuse me, beg your pardon, let me look at targets. From this point to this point, from 0 from 1 to 0, we'll see that the targets TPs will have 0.382, 0.618. You can see that was where 0.618 is. Perfect at that point. 0.618. So this is our final target on this trade. Is over here. Final target is here. 0.618. Final target. Then you can target this liquidity point, this fair value gap, and extend your target. But then final target is what? 0.618, and it is just at that point. That is your final exit on this trade. That is how you secure profit on this particular trade. So that was how the trade played out. And then a lot of people, I made profit, but then I closed. I think I closed around. I was holding anyway, but then I closed around here. I think I closed around here. So now the psychology here was that I was not able to hold this trade to full TP. And why? You record the reason. You journal those things. How do you journal this? Now I've shared this journal template with you guys. So we're going to be adding something to the journal template now. Okay, you have access to all of this. So now if you go to new, you will see the template. This is the template. You click on that. You click on edit. Okay. If you click on edit, you have I've added some things on this. I've added there. You can add all of this information here. Okay. So now what you guys can do is simple. I've also added risk to reward also. Maybe on the next episode, maybe on episode 5 or so, I'll teach you guys how to add formula on Notion and all of that. So, but then this episode is on trading psychology, how to track it on any particular trade. So click on add a property, and then we're going to add a drop down. We're going to add multi-select. Okay, let's make it multi-select. Or let's make it multi-select. Okay, let's make it multi-select, and then we'll name it psychology. Okay, name it psychology multi-select, and then we'll add option. So we're going to add fear. We'll add fear. So the first one is fear. Second one is greed. Fear and greed. The next one is patience. Okay. Is it patience? I think it should be patience. Okay. And then we'll have patience, greed. We'll have fear of missing out. That is FOMO. And then which other psychology, which other emotions do we usually feel whenever we're on a trade? Over leverage as well. Over leverage, meaning that you are trading more than your accounts. Over leverage. Okay. Over leverage, FOMO, patience, greed, fear. So these are the emotions you track whenever you're on a particular trade. So depending on the mood and depending on what is happening currently on that particular trade, the decisions you're making. So you'll be able to tell yourself, okay, I over leverage. You now explain what really happened. FOMO, patient. I was patient throughout the trade. I was calm. I did not over leverage. I was not fearful. I was not greedy. I did not have any kind of fear of missing out. You journal all of those things, okay? So, and if there's any other emotions that you will also have whenever you're on a trade, you can be able to edit and add them here and then track them, okay? So that is what you can do, right? Good. So whenever you are done, you just, put it this way and let it just be like this. And you have edited this template the way it's supposed to be. Okay, so this is how the template is. You have your pair. You can add more pair here. The ones you are trading. You have your direction. If it is long or short, you can add them. You have your time frame. You have your time frame. Okay. You have your time frame. You have your then market structure sheet. You can as well add this one also. I added the market structure. Do you have a clear market structure sheet plus inducement liquidity, which I just explained on the part 1? It's a yes or no answer. If you have, yes. If you don't have, no. Entry model, we have our entry models. Then entry price. You enter your price, your stop loss, your take profit level. Broker, you can add more broker depending on the one you're using. And then psychology. I think I need to bring this one up to, let me bring it up to before entry price. After psychology, after entry model, then it should be here. So now you can select anyone. Okay, you can select, okay, patience. I was patient throughout this trade. So you can now add comments. What happened? What played out? Were you patient? Were you greedy? Did you over leverage? Were you angry at that point in time? Were you having bad feelings, or were you, what happened? Or you didn't wait for entry. You were impatient. So you explain yourself what actually happened. And then once you begin to track all of this psychology on your trade, you will see so many improvements. You begin to see some conscious improvements you'll be making on your trade. And then before you know it, you've already mastered your psychology. You've already mastered, because you say if you can master your mind, you've mastered your trading. Okay, that is just, if you master your psychology, you master trading. So that is just how you can be able to track all of these, these things that affect you as trader. These things that affect you, that it's not even about strategy, just about those, emotions and those, psychology that affect us as traders. So if you can be able to track all of these things on your journal, as time goes on, continuously, you start working on them and you start seeing tremendous improvement. Okay. So another thing you have to also add here, if I'm not mistaken, is closed in small profits to take another trade. Closed in small profit to take another trade. So this is another thing that most people also do. They will just close the small profit to take another trade. So you can still add the ones, you that affect you as well. I think most times I always have this issue of closing in small profits to take another trade. So if you can start journaling them and then start to see the after effects, you'll be able to see how to improve on all of those things. So now this particular trade, that is how the trade played out, and it played out massively well. Okay, so that was the sell. Now let's look at the buy that happened on this trade. I think I'm actually joining so many things together so I can be able to stick to time. Great. Now the next thing that happened here was this buy that actually took place. Now at the end of the trading week, just as I'm making this video, today is actually Saturday, so at the end of the trading week, I always look at what happened, what is happening on the chart, where is price right now, and all of that. Okay, so I saw that price was first week, second week, third week, fourth week, fifth week, sixth week on a continuous downtrend. There was a setup that came up. That was a shark. Is it a shark? To be a shark pattern that came up on the 4-hour time frame. Yes, it was a shark pattern that came up on the 4-hour time frame, if I'm not mistaken. Yeah, so it was this particular shark pattern that came up at 0.886. Okay, at 0.886. No, it was cipher. Sorry, it was cipher pattern that came up at 0.786. Great. At 0.786. Okay, so the first pattern that came up here was this particular one, this cipher pattern at 0.786. That was the first setup that came up. But then I looked at the higher time frame. I looked at the higher time. I looked at the weekly time frame. I found out that that particular point is not a key level. Though there is an imbalance here, but then there's an order block here. So I was like, since we have an order block here and there is no inducement liquidity that was closer here, So let's see what price will do as it approach this key level. So that was what I said. Okay, fine. This cipher pattern may not hold since we have an order block here. Let's see what price will do as it approaches what? This order block. And since that cipher will not hold, then we'll start to look at for shark of 0.886, which actually align with that what key level. In fact, if you use instant entry on this trade itself, you'd have also made profit also. If you use instant entry, most times I use instant entry if the harmonic patterns aligns with the key level. I use instant entry and put my stop loss far away from here. Okay, I use instant entry most times. But then we're going to talk about instant entry, confirmation entries, and all of that on this trade. Okay, so now that cipher failed, and then we had what? Shark pattern of 0.886. Now you can decide to go with the shark pattern, which is valid, or you can decide to go with the bat pattern, which is also what? Valid. We have a bat pattern of 0.5. You can decide to go with this shark pattern, which is valid, or you can go with this bat pattern, which is actually at 0.5. So whichever one you want to go with is 100% valid for this particular trade. So I went with the shark pattern because of the structure. I just love the way the structure is very clean, and I went with this shark pattern. Okay, so now let's look at entry. The first entry was instant entry at 0.886. Since it aligns with the key level, it is valid. The next entry is structure shift. Okay, so this could be on the 30 minutes time frame, 15 minutes time frame, or on the 1 hour time frame, as the case may be for this particular trade. Now you can see that with this indicator, it also gave us that structure shift, which you can still use your naked eye to actually spot it. Now we had what? Break of structure here, not a sweep. Since we have a break of structure here, we'll be looking at for inducement liquidity before taking our trade. Hope that is making sense right now. So we had a break of structure here. So now we'll be looking at for what? Inducement liquidity. And then what happened? This is the high that broke that structure. So if price takes out this high, we have what called market structure shift. And in the first pullback that market makes is the inducement liquidity. Now this is the first pullback. So this is the what? Inducement what? Liquidity. Since we have a break of structure, this becomes our inducement what? Liquidity. Now, since this inducement liquidity did not take out this order block or this resistance that was supposed to hold price from pushing up, this becomes a breaker block. Okay, so this becomes what? A breaker block. Great. So now what happens here is that we can now use this order block that was supposed to hold price from pushing up as our what? As our entry, since it's closer to the inducement liquidity, not this what? Not this other block here. Not this other block here. This is the one we'll be using. And you can see how price came there, tag into that place. And your stop loss, of course, is going to be at the just few pieces below the low of this other block. That is a good place to put your stop loss. Very good place to put your stop loss. Yes. Very good place to put your stop loss. Okay. So now you can see that a lot of people will be waiting for price to come back to this other block for them to pick an entry. But then there was no liquidity that that will make price. The only thing that will make price to come back here is if there is no enough liquidity on this breaker block. That is what will make price to come back to this to this other block here. You can see that price will start to do something like this: lower low, lower high, lower low, lower high, lower low, lower high, something like this. Right? Great. So now, since we have enough liquidity, since this is valid, I will have inducement liquidity here. This entry was valid. You can see that was what happened. Very clean, very, very clean, very, very clean, very clean. Okay, so let me group this for you guys. Okay, great. So that was what happened there. I'm already done. If you're watching the recording, you'll be able to understand how I was able. I've explained the psychology, how to track your psychology, I've explained how to track your psychology. Let me just run through that again. Now, on your Notion journal, the one you have, go and edit it. Add you can add most of these things. You have results. Of course, you guys have this one already pending, and loss, win, break even, fail. You guys have all of those things. Pair, you can add a property pair, add the pairs of trading, created date, all. So this is the template, okay? Weekly, rejection week, order block, support, resistance. So you enter your weekly harmonic pattern, bar, cipher, time frame, 1 hour, 2 hour, daily. Now, clear market structure shift. That is, do we have a change of character and inducement liquidity? It is a yes or no. You can add this one there. Clear market structure shift plus inducement liquidity, yes or no, you add it. Entry model, we have them here. Breaker block, supply to demand flip, seller's exhaustion, buyer's exhaustion, all that. So the one I'm teaching you guys on this episode is breaker block after market structure shifts. Okay, so and then other block after market structure shift with inducement liquidity. That's what I'm teaching you guys on this episode. Okay, then another thing I added is psychology. What is the psychology effect are you having on this trade? Now, here you can add the ones that affect you personally. Is it over leverage? Is it fear of missing out? Is it patience? Is it impatience? So, is it greed? Is it fear? Is it that you close in small profits? You close in small profit to take another trade. So, this should be small profits. You close in small profit to take another trade. And then, at the end of the day, you find out that had it mean you held this trade, you would have actually made enough profits. Or had it mean you did not close, you'd have lost the one you had. So you track all these informations and then see how this whole thing plays out. Because every trading opportunity is going to be different. And every trading opportunity will have different emotions and different psychology that is actually in line with it. So it's good to track all these informations on any particular trade you are taking. So you have your entry price, you have your stop loss price. These are numbers. You can add property. Just click on add property. You add numbers and all of those things will come up there. Then this risk to reward. I'm going to teach you guys this on the next episode. How to use formula to track these things. I'm going to teach you guys on the next episode. So that is all about it on this particular template. So once you are done, you now leave it. So if you want to now journal a trade, you just click on new. And then let's say, for instance, this particular buy right now, you have Euro GDP, okay, and then you have what bullish shark, okay. So we have bullish shark. I've talked about the entries. Okay, let me just hide this. Great. So for the entries, I was saying that your entries are this swing point that price made as it was coming to this key level, and you can see that this place is your final target, and you can see that it aligns almost with what 0.618. like I explained with you guys up here. These are your targets, target, and target. So it is just that simple. So please, if you are trading this week and you have any setup, you can as well share with us so we can be able to guide on how to place your targets and all of that. Okay. So you journal all this information, and then you can see that I closed around here. That was where I closed because I had another setup on Euro USD or so, and that setup was actually in a drawdown. So I have to close this one a small profit. So you will come to your journal, and then you journal that psychology, that emotion. That's what happened. I closed that because I was looking for another trade, another pair, and I wasn't supposed to do so. I was supposed to, allow this one to play out before all of that. So, as time goes on, you will start to see improvements in your trading and your psychology, because most times it's not even about the strategies, it's just the psychology. That's just it. And God will help us as we keep doing this, and we are going to see improvement. It's not going to be easy, but then I hope things is going to get better, because as you keep reviewing your trade, you're going to see things playing out the same way often. And the more we know these things, the more we get better. So that is what we always pray for, okay? So now, that was how this sell played out. Now, the buy. For the buy, we are now on the buy. We have the buy Euro GDP bullish shark, and then pair, we select the pair Euro GDP. Okay, this is a pair, and then direction is long. Weekly, that is a weekly order block. weekly order block. There's no weekly order block. Yeah, it's a weekly order block. Let me go to the weekly time frame. It's a weekly order block. Okay, that is a weekly order. You can see that this is an order block. So it's a weekly order block. So you take a screenshot of this. You copy the image. You come here. A weekly order block. You paste it as a comment. Great. You paste it as a comment. Harmonic pattern, sharp pattern. So sharp pattern, let's look at the picture of that sharp pattern. Let's go to the daily time frame or on the daily time frame on the 4-hour time frame. Okay. You take a screenshot of that. You've already mapped out your pattern because it's weekend. So you have done all of these things on the weekend, and then you now take your screenshots, you copy the image, you come here, you paste it as a comment. What I also normally do is I come down here to this place weekly. I come to set up and paste it here as well. So this way I'll be dropping my comments and everything. So time frame is on the 4-hour time frame. Now clear market structure shifts and inducement. If at that point in time you don't have any clear structure shifts here, for instance, now let's say this was on Wednesday, Thursday, Friday. Okay, this was on Thursday. For instance, where is the last week on this trade? The last week on this trade was Tuesday, Wednesday, Thursday. This was Friday, right? Good. This was Friday. So now at this point in time, the pattern has not completed. So no structure shift, nothing has completed on this trade. So you now say no. So there is no structure shift. So you cannot continue again because this has not happened. So all these ones will be empty because of what? There is no clear structure shift. Now, when the pattern finally completed, and then we'll have a structure shift. Now, this is where I start looking out for entry. Now, the first entry on this week, which I personally caught, because I was actually online when I came. I've already mapped out this. What happened was very simple. When I came, I've already mapped out this bullish candle, this bearish candle. I was like, fine, let me see if I'm going to see seller's exhaustion. Let me see if I'm going to see what seller's exhaustion. So by 10 a.m. this closed. By 6 a.m. to 1 p.m. this one closed. Now I was actually online by that 1 p.m. I was online. I was just waiting to see what this candle will do. I was online. So first of all, we already taken an entry around here. We took an entry around here on that trade. I think it was around here. Yeah. This was a failed seller's exhaustion. We took an entry around here. I think I sent that entry, and I told you guys that I am not confident on this trade because the pattern has not finally completed and we don't have a clear structure shift. So I'm risking small on this trade. Okay. Now, why I took that trade was because of this sweep I saw here. But then after this sweep, price did not take out this high. So it was not even valid. So that was the mistake I made. So now, finally, we had this. And I told you guys that if you still want to, let me see the screenshot of that trade. I think I actually took a screenshot of that. I told you guys that if you still want to take the trade, yeah, let me just bring it to screen. Great. I said, if you wish to buy this pair, Euro GDP, entry at this and that. So a lot of people saw the post. I mean, after a few days, that was when they even saw it. So entry at 0.83869. 0.83869. Let me look at that. 0.86839. 0.8 where are you? Entry is at 0.83869. 83869. 83869. That is the entry. 869. You can imagine. So that was where I told you guys to take an entry and then stop loss around here. We even entered this trade at a very, 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 very good price. Very good price. Who would have thought that this would finally play out like this? Who would have thought? So that was where we took that entry at this particular spot here. But then This is the real entry. The real entry is what? This valid seller's exhaustion. Another entry is what? Clear market structure shift. Now, this is what you are looking for, the market structure shift. And then on the 1 hour time frame, even on the 30 minutes time frame, you can go down to 30 minutes time frame to look at what? Market structure shift. Okay. Now we have what? Clear market structure shift. Now with this indicator, you can as well use this indicator. Sometimes it doesn't work that way. Sometimes it helps. So you can see that we had that chalk here with this indicator. It was very clean. We had a chalk here. So you mark it out and you do what? You take a screenshot and then you come here and you now say that for this particular trade, we now have the clear market structure shift, and this is what we have. Now, after now, what is the next thing? The next thing is what? Entry. What is your entry? I've told you guys that on the first part, I said that after the market structure shift, the first pullback that the market makes is the inducement liquidity, provided that we don't have any sweep of this point. So you cannot look out for aggressive entry because we did not have any sweep. Remember the sell we had, this high was a sweep. This high was a sweep. So there is no need for us to look out for inducement liquidity. We just have to sell from the available order block or from the available fair value gap because this place was a sweep. But this particular one, it is a different ball game because of what? It was a clear break of structure. So since it was a clear break of structure, we have to look out for inducement liquidity before we take our entry. So after this market structure shift, this first pullback that the market makes is what we call inducement liquidity. Okay? It is what we call inducement liquidity. Now, I said on the first part that after the inducement liquidity, if the inducement liquidity did not mitigate this resistance here that was supposed to hold price from pushing up, now this resistance becomes our what? Our entry. But if this inducement liquidity, this retracement probably took a lot of time and then it was doing something like this, and then comes down to this point, we have to wait for another what? Structure shift and then before our entry. But that was not what happened here. This inducement liquidity, if the candles are too much on the lower time frame, you can go down to the 1 hour time frame to look at it clearly, or even on the 4 hour time frame to look at it clearly. Now, this bullish candle here, that the bearish candle length of, is the order block. But then I used to mark out the whole of this. I used to mark them out. I just have to mark them out because price can react from anywhere around that level. So now price was supposed to push to this point and then continue to sell. But since it broke through it, this place now becomes a resistance level which price will test. And since we have inducement liquidity here, it becomes a very good entry price. This is what we call breaker block. It is an order block that failed from holding price. Price will come back to retest it as a breaker block. It's just that simple. Okay, so that is a very good entry for this trade. So now, if this one fails, the last one now is this what? This order block. But then a lot of people will be waiting for price to come back to this order block for entry. Now, that's why I say knowledge is power. The more you know, the more you get better. Now, with this insight I've shared with you guys now, if you go to the chart now, you start to look out for inducement liquidity, start to look out for points of interest that is closer to the inducement liquidity for your entry. Okay, it takes time, but with time you'll be able to get it very well. So now for your entry, you can take a screenshot of this and then you copy it and then you paste it here as your entry. That will have a clear inducement liquidity and then a valid what? Breaker block for what? Entry. Now, sometimes you have to wait for it. You have to wait for price to give you the reaction, probably on the 4 hour time frame, to see how the whole thing is going. Sometimes I used to wait for this candle to close. You can see after this bullish candle close, price came back here, and then we can start to look at for, even if you don't want to catch it, you're scared, you can just hold on and see. As price close here, you can even take your entry from here, or you can just wait for this retracement and then start to look out for entry from it. It's still valid. Okay, now that is that. Now for your targets, these are your targets. First target is here, and the final target is what? At this level. Okay, great. So first target is here. First target. It's the first target. So let's just assume that we had a pending order here. First target is there, and then for your stop loss, few pips below that breaker block is good. Sorry, guys, for your target, and the final target is actually here. Okay, great. So as this was going on, when price get to this point, there was another setup here on the 15 minutes time frame. With your harmonic indicator, you can as well see that setup very well. After a few days, if you go down to the 30 minutes time frame, this was a valid setup that happened here. I think I mapped it out around here. Okay, so we had a break of structure here. And then we had this low. So I think I marked it out. Let me just see. It should be this guy. Great. So I marked it out here. So this is a cipher pattern, cipher of 0.786 from this point to this point. It was even a cipher pattern. Okay. Great. So now with this one, I can go down to 15 minutes time frame to look for structure shift. It's just the same thing. So now inside this journal, you can as well put it here that we'll have a scaling trade on the lower time frame. Scaling trade. Okay, you can say a valid cipher pattern on 30 minutes time frame. The same journal. So if that one hits target, you can duplicate this one and then change the pending to win. So that it's just all about how do I put it now? It's all about using one stone to kill two birds kind of thing. Instead of creating a different profile again for that same trade, you can put everything here. So if the trade end up becoming a loss, you can just duplicate it and then, change it from active to loss. If it ends in profit, you can duplicate it and change it from what? Just click here, click on duplicate, and then change it from pending to what? To win. So that is just that simple. Okay. So now you can see that we have a clear market structure shift here. Now you can see that everything I'm teaching here makes sense. After the market structure shift, what you need to look out for is before that market structure shift, was it a break of structure or was it a sweep? Now you can see that this was a sweep, not a break of structure. Oh, thank you, Jesus. Thank you for this clarification. This was a sweep, not a break of structure. And what did I say? I said what? Since we have a sweep, you can buy or sell from the available order block at the discount zone or the premium zone, as the case may be. So this was a valid order block. Since we have a sweep, you don't need to wait for inducement liquidity again because liquidity has already been taken. I hope that is clear. Why we wait for inducement liquidity is because price are not taking inducement, price are not taking liquidity. And inducement liquidity is a form of liquidity that will help price to push price to a different, is a fuel that fuels the movement of price. Since price are taking this liquidity here as a sweep, we don't need to wait for inducement liquidity again. So we can sell or buy from the available order block. So that was why this order block was what? Valid. So you can come here and say, we have a sweep. You can just copy this one and then you paste it. And then you can just come and say, we had a sweep. We had a sweep and not a BOS. So we can buy from the available OB, not waiting for IDM. Just that simple. It's just that simple, guy. Like if you're going into this new week now, you are going into this week fired up with all this information. And then as all these things are going on, please don't forget to track your psychology. You are calm, you are patient, you are not fearful, you are patient. So now patient, you not say, okay, I'm holding on to this trade, I'm not over trading. So track your psychology as this trade is going on. Now, for this one, the target I've already explained itself. Final target, since it's a cipher, final target is here. Let's go down to the higher time frame. Since this one is a cipher, first target is even very close here. This is the first target, very, very close. Price scattered that one within few hours. We achieved that one. Okay. Then another target, final target is here, which price actually achieve within few days. So you can see how much you have made in a single trade. So you only need one trade that tick all the whole buttons to make a clean, to make consistent profit. You don't need multiple trades, just one single trade that play out very, very well. Keep holding on to that trade and it plays out very well to recover every losses. One single trade. So it was a very wonderful trade on this particular asset, and I really enjoyed this trade. Even though I did not take advantage of all of this move, but I'm so happy because it really played out and it teaches us a lot of things when it comes to trading. It teaches us a lot of things when it comes to trading. So now for this buy, it was just a very sweet ride. I was just watching the pair, and it has a very strong correlation with Euro USD. It has a very strong correlation with Euro. So it was last week that the final target was met on this trade, and it was a very wonderful and excellent trading opportunity. Beautiful. So now I'm looking at something here again on this particular trade, but not yet there. Okay, if you're looking at it on the higher time frame, you can see that price is also coming to this point, and then this was what happened here. So this was the other block a price came to, and it reacted from here, and then we also have this one also. A price is coming right here right now. So I don't know if we have anything. So I'm going to look at the setups for this week. We'll look at how to take advantage, but I'm not seeing anything at all. I'm not seeing anything. First of all, from this point to this point, you can see we have 0.382 so I'm not seeing anything at all. And this indicator is not giving us anything. Not seeing anything at all. Even if I decide to go from here, okay, I might see something like this. But it's not even, I might see something like this. Though I don't really like this setup. But then I might see something like this, a shark of 1.13. Okay, so based on our entry now, I just spotted this one right now, just like that. But based on our entry, do we have any kind of, do we have a sweep? Do we have a sweep? Do you have a structure shift? So let's go to the 30 minutes time frame. Okay, we still don't have a structure shift. So we don't have a structure shift. So this is the last structure here. This is the last structure here. Price, I'm not taking it out. So we don't have a structure shift for this trade. And then we don't have a sweep. So there is nothing to look for here. There is nothing to look for here. So this one, I'll just leave it like this for now. I'll just leave it like this for now. So the same thing happened on gold. That was this week on gold. Let's look at gold. I also caught a buy on gold. That was this week. I also caught a buy on gold. So this buy, I took this buy on gold. That was last week. Okay, the same thing here. This was valid inducement liquidity, and then valid key level. Okay, so this one, it was even the indicator that helped me to catch this setup. Yes, it was the indicator that helped me to catch this setup. It was on the 1 hour time frame, if I'm not mistaken. Yeah, it was on the 1 hour time frame. So I saw the indicator, it gave me this setup. I said, okay, fine. If this setup is going to hold, I will look out for structure shift. So when I saw the setup, it was butterfly pattern. So what I did was to measure. I measured the pattern. I found out that it was actually valid. I saw it that was 1.7 to 1.1414. It was actually valid. It was valid. I looked at it. It was valid. It was valid. 1.272. It was valid. I think it should be from here. Made a mistake. Should be from here. Wait. Something like, it was just something like this. So it was valid. So I said, okay, fine. Let's look at for structure shift on the 30 minutes, 15 minutes time frame. So as market opened on Monday, yeah, it was on Monday, Sunday, Monday. What I saw was this structure shift, and because we have a break of structure here, I have to wait for inducement liquidity. So see what price did. Let me remove all of this. See what price did here. It's the same concept, but this one now requires you to look at it critically to see what the market did. Now, after this break of structure, we had what? Market structure shift. Now, the first pullback that market makes, what is the first pullback? Look at this pullback here. This is a pullback. You can see that now, since this is a lower time frame setup, I can even go down to the 15 minutes time frame to look at it very well. See what happened here. Okay, this was a pullback that market made, and then after that, what happened? It came back again. Now, this pullback mitigated the wick of this other block, not the body. So the body was still available. And mitigation happens after break of structure or change of market structure or change of market structure, which is change of character. Okay, mitigation happens after that. Inside this whole thing, there is no mitigation. After we have a break of structure, then we can talk about mitigation. So the body of this other block was still available, and that was all really happened. But then I took my entry first of all from there, from this one. That was where I took my entry from here. So I took my entry from here, right? I took my entry from here. Price pushed all the way up and then came back again. Then my stop loss was few pips below this breaker block. Few pips below here. That was my stop loss. This is a breaker block. So few pips below here is my stop loss. So you can see what happened. It was a very smooth ride. So what we have learned from this live today, from this episode today, is break of structure, wait for inducement liquidity, and then look at where that inducement liquidity is. Is it closer to the other block at the supply or demand level, or is it closer to the breaker block? If it's a sweep, not a break of structure, then you don't need to wait for another inducement liquidity. Take your entry from the other block or from the breaker block that is closer, that is available. Take your entry from the other block that is what available. And then also journal your psychology on every trade. Are you patient? Were you having mood issues, or were you angry at that point in time? Were you, scared of the setup playing out? Were you in a small profit and you just wanted to close because you needed to take the profit? Were you angry? Were you fearful? Were you greedy? So all those emotions, you journal them down. And then what else have I talked about on this live? And then key level also, very important. Okay, key level also is very, very, very important. So I've thought about so many things. So this will bring us to the end of this section. So before we round up, I want to talk about US oil trade also. The same thing that happened here on US oil trade. The sell that happened. A lot of people we are looking at for, because of the recent issue of war that was happening on Iraq. A lot of people were actually bullish on US oil. But then, of course, I saw an opportunity for a sell and I took it, and it played out very, very well. This was a valid key level. So what I normally do is that, like now after this live, I'll go back to the chart and mark out my key levels. I always update my key levels on the weekend. So I marked out this other block. And then you can see that this was also a valid liquidity point. Okay. So I've already marked out this other block. During that weekend, a lot of people were bullish. In fact, when I went online, people were like, US oil, I'm gonna buy this asset as market open. It was crazy. The market makers were Are you serious? I swear it was crazy. The market makers it's crazy. And then that time there was a particular that time there was a particular border, there was a particular route that they voted for to be closed. And if they close that border, it will make it difficult for other nations to be able to export oil. So it will make the price of oil to skyrocket. So all those fundamentals, it was crazy. I was like, oh my. So what I did was I actually reduced my risk on the trade. Yeah, I wanted to risk 1% on the trade, but I ended up risking 0.5% of my account on that particular trade. So let me just see how this thing plays out. Okay. And then what really gave me confidence on this trade was because of the fact that we had a valid order block here on the weekly time frame. So what I did was I said, okay, fine. I've already taken, okay, I have 9 minutes left. I said, I've already taken, okay, I'm done with this. Just an example. Let me just delete it. I will just leave it here anyway. I've already done it in the past. So let me search for that US oil trade. Let me search for that US oil trade. It was here. Let me search for it. US oil, bearish bats. Yeah, it was this one. I made 5.45 return on the trade. So I marked it out. I was like, okay, fine, let's see how this thing plays out. So it was amazing. So now, just to wrap off this section on entry and all of that. So what I did was I said, okay, fine, this is a valid key level. Then do we have a harmonic pattern into that key level? That was another question I asked myself. Do we have a harmonic pattern into that key level? This was tricky, but it was tricky. What I used was a part 2. I used the part 2 to mark out all the retracements because the indicator did not identify this one. I used my naked eye to spot it. I saw all of these things and then I was like, okay. First of all, I say, can we have 0.886 into this place? That's another thing I was asking myself. Can we have 0.886 into that place? I said, okay, fine. And one thing I've noticed is this, like it was from one trade I took on GDP CHF. That was the trade that opened my eyes. If I have a setup, right, where the potential reversal zone aligns with the weekly key level, and that weekly key level is an order block, or a very good rejection week, I always go with instant entry at that 0.886 gone. I always go with instant entry. Like now, that's Euro GDP trade. Let me go back to that. Let me just wrap off. This Euro GDP trade that happened here. Okay. This place now is 0.886. And it is a valid weekly order block. It is a valid weekly order block. So whenever I have a key level, okay, and I have a harmonic pattern that the potential reversal zone aligns perfectly well, and I'm not talking about where you will see some pair and you will have so many key levels on the higher time frame. You don't even know the one to go for.
Yes.
So I'm talking about where you have, like after this key level now, there is no other one again.
Other key level.
Exactly, and that key level. Exactly, and that key level has a harmonic pattern that the potential reversal zone aligns perfectly well inside that key level. I always go with instant entry, and 6 times out of 10 times, it is always a sniper entry. Like this trade now this buy that happened, if you use 0.886, you don't even necessarily need to wait for any other confirmation. It was a valid one. Like now, if you put your Fibonacci level from here to this point, you can see 886, right? The only thing is that you're going to extend your stop loss now, few pips outside this range. Instead of using tighter stop loss like this, you can extend it outside because your price breaks out of this key level. It is a sell. So you can just put your stop loss. Maybe you can use 50 something pips stop loss. Okay, and then so that can be able to maximize it. Maybe instead of making 16 hour, you can make like 5 hour, which is very, very beautiful. You are spending $1 to make $5 on a trade. It's crazy. It's massive profit. If you are risking $20 on this trade, you are making $100, which is beautiful. If you are risking $500, if you are risking $100, you are making $500. It's a very good return. Okay, so now you can see beautiful entry. But if you can as well, maybe you want to go tighter, I can say go tighter. Probably just want to know if it does not work out so that you know that you don't want to put too much exposure. It is still beautiful, but it was a great, sniper entry. So that was what happened here on US oil, just to wrap up. And then you can see that it was a very beautiful sniper entry there at 0.886. But then that was not the entry I used for that particular bearish bat pattern. Okay, so now it was the fact that I have to wait for structure shift. But then that structure shift, I asked myself, the last break of structure that happened before that structure shift, was it a break of structure or was it a sweep? See what happened here. When price came to this key level, the last low is here. So this was my chalk level. That's my market structure shift level. Then after price did not take it out, but what happened? Price pushed all the way up here. And if you enlarge this thing very well, you can see that that was a sweep. That was a beautiful sweep. Look at it. Beautiful sweep. And you don't even, that is sometimes, whenever price approaches a key level, I'm always very, very observant. I keep monitoring it to see what is going to happen. There are two things that will happen: break of structure and market structure shift or sweep. So I was waiting to see what happens here, and I saw that this was a sweep. When I saw that this was a sweep, I was okay, fine, let's wait for displacement and a valid order block for me to enter the trade. I saw a displacement, a very massive displacement here that occurred here. So now, for this particular thing, I don't even necessarily need to look at for all of this. So I have to start looking at for the structure that price was making as it was approaching this high. I can see that this was, higher high, higher low, higher high, higher low, higher high, higher high, higher low, and all of that. So I saw that price did what? Took out this point, and this is 1 hour time. If you go down to the 30 minutes time frame, it is a couple of candles. So on this leg now, on this particular leg, it was higher high, higher low, higher high, higher low, higher high. This one is a sweep, higher low, higher high, higher low, and then displacement. You can see, right? Great. So now, once I saw this displacement, and this was not a break or structure, it was a sweep. I said, okay, fine. Since we have this displacement, this other block right here becomes my entry. It's just that simple. Since it was not a break or structure, it was a sweep. So that other block becomes my what? My entry. Okay? So that is the first entry. Second entry is reversal candlestick formation on the higher time frame. In fact, that was another one I saw. Was okay, fine, we are ready to push that. I saw it here and I said, okay, fine, we are ready to push that. It was even later on, later. I saw it later. I saw it. Later, I saw it. When I saw it, this one came down, but it did not close. It closed inside again. This one came out and closed here. Or more, as this one closed, I said, fine, let's log it in. I logged it in. I think my stop loss was somewhere around here because I wanted to keep things too tight. I just closed my chart, opened it again. I saw that almost, I said, Jesus, crazy. This was so massive. It was so massive. And then final target was at this point. I'll let you guys, this is the refined target. Beautiful. I think I even closed before then. I think it was another journaling of risk I need to also make. It was beautiful target here, and there it was massive. It was massive. So now we have a setup here this week, but then this setup, let me clear all of this. I think I already have all of this information. Let me just clear it. I have 1 minute, 50 minutes. Okay. I have a buy, a bullish bat. It was the indicator that gave me this setup. This indicator is very, very massive, very, very powerful. So the only thing that I have to now wait for structure shift. So now I saw this indicator and it gave me this stuff. Now on the 4 hour time frame, this is not a break or structure. This is a sweep. Okay. Good. So since we have a sweep here, I want to see a displacement and a valid order block for entry. So this order block is available for what? For entry. So let's see how price will react in this week.
Anytime we have a sweep, we won't be looking for chalk again. It will be,
we will not be looking for inducement liquidity again. It is now breakers. We now wait for market structure shift only. We are supposed to wait for two things: market structure shift and inducement liquidity before entry. But since we have a sweep, we only have to wait for what? Market structure shift, and then you now enter from the available entry. So I'm looking at to take an entry from here, stop loss below this level for a buy, since we have this massive displacement here. Now if you come down to this point, you can see that it is also valid. Now first of all, let's look at the weekly. I have 1 minute left. On the weekly time frame, is this a valid key level? That is another thing we have to ask ourselves. Is it a valid key level? No, it's not a valid key level, but then we can still play around it. That is why sometimes whenever you see a key level like this, I always very, very careful. I don't risk too much because this